Hey everyone, and welcome to This Explainer. Today, we're zeroing in on a topic that literally affects almost all of us, real estate. Specifically, we're looking right ahead at the horizon to unpack the latest data and forecasts for the late 2026 real estate market. Whether you're holding onto your current property, looking to buy your very first home, or maybe gearing up to sell, understanding the structural shifts happening right now is absolutely critical for figuring out your next steps. Okay, let's dive into this. We're actually going to skip our usual agenda today because, honestly, the data we're looking at just demands immediate attention. We're going to keep the momentum going and get straight into the core question on everyone's mind. What exactly is coming in the second half of 2026? Whether you're a buyer, a seller, or just a current homeowner, the landscape is shifting and the numbers we're about to look at provide a really clear roadmap of what to expect. Section 1. The 2026 Real Estate Outlook. So this comprehensive real estate forecast infographic comes directly from your real estate experts. And wow, it is incredibly data-rich and just packed with information about the second half of 2026. What we're going to do in this explainer is systematically break down this huge visual, pull out each major metric, and turn the whole thing into a clear, actionable forecast that you can actually use. Section 2. Rates and price growth. All right, 6.3 to 6.4%. This specific range is a real game changer. When we translate this number into practical terms, it signals that mortgage rates are expected to remain steady. I mean, think about it. For the past few years, wild volatility has basically been the defining characteristic of borrowing costs, which caused massive hesitation for buyers. So seeing this tight little bracket of 6.3 to 6.4%, that represents some much-needed stabilization in the financial environment. And honestly, that stability is everything. The explicit expectation is that mortgage rates are going to remain steady. This completely changes the game during the planning stages. For prospective buyers, it means you can actually sit down and budget without that looming fear of your monthly payment blowing up right before you close. And for sellers who are looking to move, it gives you the confidence to list, knowing exactly what the borrowing landscape looks like for your next purchase. Stability breeds confidence for sure. Now, what's really interesting about this slide is the plus 2.3%. You might just assume that with rates holding steady in the sixes, home prices might flatten out, right? Maybe even drop a bit as demand adjusts. Actually, scratch that, the data points in a completely different direction. This is the home price growth forecast for 2026. Despite those steady borrowing rates, home values are still projected to grow by 2.3% over the course of the year. What this tells us is that the underlying demand, paired with housing supply dynamics, is still pushing asset values upward. Simply put, real estate is continuing to appreciate. Section 3. Equity and market volume. $16,000. That is a fantastic, punchy number right there. And let me tell you, it represents a direct, tangible win for current homeowners. That 16 grand is the typical homeowner equity gain expected this year. When we connect this back to our previous data point, that 2.3% price growth, we really see the real-world application. That seemingly small percentage bump translates directly into market appreciation that puts real wealth, an average of $16,000, straight into homeowners' pockets this year. Your house is literally doing the heavy lifting for you in this 2026 landscape. But what does this steady rate and rising equity environment mean for market activity overall? Well, that brings us to this massive figure right here, 4.9 million. To be incredibly clear, that 4.9 million represents the existing home sales forecast specifically for the second half of 2026 alone. We aren't even talking about the whole year here. We're just talking about a 6-month window. This metric is the ultimate indicator of a highly active, flowing market. People aren't just sitting around on their equity. They're out there transacting, moving, and engaging with the real estate market in huge numbers. Section 4. The bottom line. Let's move to and see how this builds into our synthesis and action plan. This summary table beautifully aligns exactly what we've been discussing today. Right at the top, we have mortgage rates providing this nice, steady foundation at 6.3 to 6.4%. Building on that foundation, we have home price growth at a very healthy 2.3%, which in turn generates a typical equity gain of $16,000 for homeowners. And this brilliantly illustrates how this whole environment, this mix of financial stability and wealth generation, culminates in that incredibly strong 4.9 million existing home sales volume forecasted for the second half. It's like one big interconnected ecosystem. So the crucial point is captured perfectly in this quote directly from the source's bottom line. Buyers are returning, sellers still have opportunities, and the second half of 2026 looks stronger than the first. Look, the data tells a really compelling story of a market that isn't just surviving right now, but actively strengthening as we move through the year. Now, for those of you who are analyzing this data and looking to act on these insights in your own local markets, the real estate experts who provided this forecast offer a direct line for consultation. You can simply call or text 914-920-2289 to connect with them and see exactly how these broader market trends apply to your specific situation. And that brings us to the absolute most important question of this explainer. With steady rates, growing equity, and nearly 5 million homes projected to change hands, the market is moving fast. So, if you're thinking of buying or selling, how will you make your move count in this stronger second half market? The data's all right there, the forecast is clear, the next step is entirely up to you. Thank you so much for joining me for this explainer, and keep learning.